Hi. I think the high point of these 2 days has actually been the caliber of the attendees. Extraordinary, very, very successful. I haven't heard a bad word said about the conference by anyone, including about the food. And I was at a fairly well-known conference in Miami last week, and the food was dire. There we are. Dire is not the word I would use to describe this particular panel in terms of the caliber of the participants. Unusually, because we've prepared this bit, though not what we're going to talk about because we're going to freeform it, I'm going to trust them to, each of them, introduce themselves without going on for 2.5 minutes. And also I'm going to trust them to avoid egregious self-promotion of the type that mars most panels. And we're going to have a pretty open-ended conversation. But let's start with you, Bijan.
Hi. Hello? No, not functional. Hi, my name is Bijan Foroodian. We're a single-family office focused on tech, crypto, and generally AI and seed Series A investments.
Patrick Martin. I'm a serial entrepreneur. Used to run media entertainment companies, now since 10 years very active in the blockchain and digital asset space. I run my own family office and invest across the space, advise some companies, and help wherever I can.
Oh, my name is McLean. I'm portfolio manager at the single family office GreenRam Capital. We've got a few % in various different crypto strategies.
And my name is Jordan Walker. It's good to be here. I'm a senior director at RE7 Capital. We run DeFi yield and liquid alpha strategies. We're one of the most active liquidity providers within DeFi.
And the first time I ever met Patrick, I think may have been in the Bahamas. The first time I met you, Jordan, was on a plane on the way back from a Prestel conference in Zurich. And I can't remember the first time I met you, Bijan, but I've been seeing you around for ages, and I've been aware of you for a long time. Let's get straight to it. Let's pretend we're Dutch. Direct, no nonsense. Okay, we all know about the backdrop in the markets against which we're playing, but obviously the sort of people we're talking about aren't going to, as investors, take instant decisions or just be thinking 3 days ahead. But let's start with you, Patrick. The playbook, what is it? Let's just dive in.
Well, the playbook from a family office point of view, I think is, well, if you don't have any, you need to have some exposure to digital assets. I've been in this now for almost 10 years, so I have, my playbook might be different from other people, but I mean, if we're rolling this back to the last few days, I think if you have a general view of Bitcoin and digital assets as a good investment, then if you get everything 40% off today, then I think it's a good opportunity to buy some more, right?
What do you think, Brendan?
Well, I guess in terms of the playbook, it's which way will you access digital assets? Could go down the directional route, get some Bitcoin, could go down the VC route, could even do like the more altcoin approach, could do the yield farming, or you could do like a market neutral stat arb type approach. So I guess the playbook really depends on your risk tolerance.
Are we limited just to the liquid end of things? Jordan?
No, I think there is a broad spectrum of assets that are available. I think casting back, to Patrick's point, 5 years ago, access to crypto for a family office looked pretty much just like either VC or a direct allocation into crypto. There have been crypto managers, that have been in existence, but from a access standpoint, many of those were maybe, let's say, under the radar and not well publicized. I think today, you have ETFs, you've got ETPs, you've got venture, you've got liquid venture, which is, a subcategory, and then, of course, a plethora of crypto liquid hedge funds as well. I think more and more it will look like a blend of an allocation amongst the traditional family office portfolio.
Bijan?
For us, originally, Bitcoin and crypto was a kind of a tech investment. But over the last couple of years, with the concept of kind of debasement and trying to preserve value, we've put it in the same category as gold, silver, copper. So we actually have invested across all of these together. And even though the price of Bitcoin has kind of slightly come down, our investments in gold and silver has actually continued to go up. So on a portfolio basis, we're quite happy with it.
Yeah, but there's a lot more to this space than just Bitcoin. I'd like to hear your views about that. And having alluded to it earlier, there's a lot more than just the stuff at the liquid end. Over to you, Patrick.
So originally I came into the crypto space from a fintech point of view, because for me blockchain is primarily a financial technology innovation. So then looking at that, it's I've been investing in blockchain-based projects, venture companies. I've been investing in the tokens as well. Ethereum is the network that most things run on, and so buying Ethereum tokens, you're actually buying part of the network, whereas you basically, if you had known the internet was going to be this big, if you had been able to buy an internet token 30 years ago, you probably would have. So that's kind of Ethereum or Solana for me. So that's infrastructure. Bitcoin is more a transaction and store of value approach, and then the deployment of this technology in the broader economy is basically a trend that I see, that where we're going to 100% tokenization of all financial assets in the next 10 years. I think that's or maybe 5 years. So NASDAQ, I think, and New York Stock Exchange announced that they're going to tokenize all the shares that are trading on their venues. So I think we're already going strongly in that direction. And so I look at this as, that's kind of my playbook, how I look at the space, and then I try to find attractive entry opportunities to participate.
Brendan.
Well, I guess in terms of the different ways, so say VC, you could access it through the early stage tokens, you could buy equity in the business, but often there could be a conflict in the sense that the owners of the equity will want the equity to go up in price, and it could be at the detriment to token holders. So how you access it, you need to be sure you're on the right side of the fence. And a key way to do that is sort of to follow the original founders and follow the internal capital and invest alongside them.
Jordan.
Yeah, I think when it comes to a playbook, there are quite a few factors that will come into it for each family office. When I first came into crypto, sort of 6 years ago professionally, some of my clients I managed, wealthy South African families and high net worth individuals, and Bitcoin for them was an actual means of remittance and store of value. And, that opened my eyes up to, a very different use case to how I thought and perceived Bitcoin, but that was very tangible for really understanding, the thesis behind this as an asset class. And then I think you can separate that from, just price action, but there's an evolution, because ultimately, each family office has a very unique objective for what they're looking at. And I think, when we speak to family offices, first and foremost, particularly if they're getting off zero, it very much comes down to, what is the objective, what is the classification of, crypto within your portfolio. And that's very different. If it's from a venture lens, that's very different from a market neutral lens. And, these classifications, I think, will again evolve, because all of a sudden you're bringing in things such as, tokenized stocks or tokenized equities. And that can exist in a different format, for example, within DeFi, which has a different return profile to what, just having the underlying would be. So I think starting from, what is our objective, what type of exposure we're looking for, can guide to how you express that.
I'm glad you raised that, Jordan, because when Bijan talked about the exposure that he's had to this space, it left me wondering, given the way that you've paired this off with things like gold and silver, how does this stuff exactly fit into your thinking? Let's run with that and broaden it into just, how this fits into asset allocations across family offices in the plural.
I think But the concept of debasement, where currencies are printable, therefore devaluing over time, and there's limited supply of bitcoins, gold in itself, silver. So it kind of blended together for us as a theory that let's not just be in one entity and have a bunch of entities that resemble the same characteristics. But then on the technology side, so in the UAE, and I just came back from Abu Dhabi, as we talked earlier, we're looking at a tokenization entity that is tokenizing real gold. So gold is deposited there, it is tokenized, and then it's held by people. So we're kind of getting into technology as well as the valuations.
But you're not getting into the technology in terms of the picks, shovels, infrastructure, payment rails, etc.
It's kind of too technical, but we have looked at startups in the seed Series A. So we invest in seed Series A tech companies, and if there's something exciting in that field, we look at it. I think the picks and shovels was kind of pretty much 5-6 years ago when the technology was picking up, and we looked at some payment systems, actually one out of a bank here in London that was trying to expand. So we looked at it at that stage, but currently we're not looking at that. We're looking more on the technology.
Well, that's interesting. I mean, there are parts of the VC community under pressure, though it may be for its own reasons, that eschew involvement in this space in favor of other technologies, if you will. Others are still active. I wonder what your view is, Patrick.
I mean, if we're looking at the payments and remittance space, that is definitely a strong use case for blockchain and crypto in particular, where you have value tokens that you can use to transmit value across the world in seconds. And you're right. I think investing in the underlying tokens is still a viable opportunity. I think if you want to invest in the companies that do it, I think I would look more into the emerging markets and then companies there that have in a ring-fenced market that is kind of capital constrained to the outside, if they can break that apart and from the inside, because if you're coming from the outside in, it's going to be difficult because you're going to be blocked in a way. And so there is an opportunity, but it's, if you're going to invest in an Argentinian payments company, the question is, do you have enough people and reach to find them and to find the best ones, right? So that's. But I mean, if you can identify them, or like a Nubank in Brazil, or places like this can be quite attractive, but it's not so easy to find, I think.
Brendan.
I guess how we access cryptos predominantly is like a fixed income replacement. So whenever yields were very low, you could go into like DeFi yield farming strategies and sort of replicate that income. And that sort of evolved into looking for more capital efficient ways to get access to crypto, particularly Bitcoin, such as through altcoins. So rather than, assuming that altcoins would go up more than Bitcoin because they're riskier, it was a bit more capital efficient. And then another way we access it is through quantitative strategies, relying on greater use of people trading it, so benefiting from the volume essentially of more retail participants. So in terms of the playbook, that's how we view it.
Jordan.
Yeah, I guess, when we work with many family offices, typically the first starting point looks like some form of market neutral expression. So, we run a DeFi yield strategy. This is akin to fixed income, and it's it's much more easily understood. One of the things I typically would say to a family office is, if they are thinking about an allocation and they want to, express that in some format, it's, how do you diligence this? How do you do that? How do you run a strategy? And for the most part, I think it's a very difficult thing to do. And to have the expertise in-house to do that is very, difficult. Where do you find a DeFi analyst who can, diligence, who can run and operate? And that's when I say, is being very clear in terms of what expression you are looking for and how to do that, because it will guide you to what that look like. But for the most part, I think as a getting off zero, starting something sort of fixed income, market neutral, you're not taking exposure. And then as you begin to learn, you can then look at these various other ways, such as maybe picks and shovels or, direct allocations into tokens. But of course, with that, it has to fit within the overall thesis.
It's interesting that each of you depicts a slightly different standpoint or approach to this, ranging from this being an almost defensive play in terms of currency debasement through to looking at this as a subset of a broader technology-related VC opportunity set. I'd like to ask very quickly, for each of you, and we're not talking about Bitcoin specifically, but just investments in this sector. Are you looking at this as a relatively defensive thing, or are you looking at this as a risk-on thing? Bijan, let's start with you.
I think it's risk-on in terms of investing in the seed and Series A early-stage tech. In terms of the Bitcoin or alts, at the moment for us it's defensive.
Okay, Patrick.
For me personally, it's part of my overall portfolio, so it's an integral part in my portfolio allocation. Especially when it goes up, I sometimes need to think about taking some away from it to allocate it to, let's say, less volatile asset classes. But it's difficult because when it's going up and you're happy, then it's I need to do that a little more. I think there are now also other technology sectors that are taking the limelight a bit away from crypto and Bitcoin, especially AI in the last, let's say, 24 months. And but I think there's also use cases when we need to put the AI on guardrails, when we need to kind of control what AI is doing. Right now, nobody knows where it's coming from and why. And so blockchain is actually a very good underlying rail that you could put AI on, and then we could actually say, oh, why did ChatGPT say what it said, and where did the information come from, and who can we blame or take to court eventually when something goes wrong? So that could be a very interesting use case.
Well, it's certainly interesting that unless something's changed in the last few days, as far as I'm aware, there are real struggles afoot in the insurance sector in terms of underwriting risk to do with AI. But back to the question, Brendan.
Well, I mean, ultimately, we have some super highly speculative VC that's almost like an educated lottery ticket, but that's meant to be very long term, and a small position, could generate a lot of return. But most of the allocation is in more market neutral defensive allocations that would be more akin to like an equity stat-arb fund. It's more like that type of risk rather than taking technology risk. It's more benefiting from increased adoption in a more quantitative, systematic way than having a punt on what will happen to the technology in the future.
Jordan.
Yeah, I would say, risk adjusted ultimately. From the trend, naturally, market neutral has been the largest allocation that we see from family offices. But that said, it's a full spectrum from pre-seed, seed, we look at extensively, and are allocating. I think crypto still presents the best asymmetric bet. I think if we look at some of the other sectors, AI, private credit as an example, valuation is a big factor here, and liquidity. And I think what you can still get from the crypto markets, again through various different types of expression, is liquidity with that asymmetric upside. And that is very powerful, and particularly when liquidity, I would say right now is it's a premium. We have obviously a lot of geopolitical things going on in the world, and having liquidity, being able to move quickly and realize some of those investments is, I think, very powerful.
Do you think that the return profile, because at least a couple of you seem to be playing into this as a pure risk-return play rather than looking at it in technological terms, do you think that the profile of all of this is going to change substantially as retail goes, the institutions come in, they have different expectations, and the family offices are left in between? Do you think that things will change over the next cycle, if there is some semblance of one. Bijan.
I think definitely the institutional players are going to take a larger role in this sector. But I can't see family offices or retail stepping away. So they'll exist, but relative to the institutional guys, they're going to be less significant.
I wonder if that will make the space slightly less attractive, if that mutes returns, as it happened with hedge funds, for example. Patrick.
So I think the institutional adoption is more on the tokenized asset side, and then Bitcoin, Ethereum, maybe Solana, so the top 5 tokens. But if you want to go up on the risk scale, you can go lower in the tokens, right? And so I think there's always going to be a space where institutions are not quite ready to play because it's too volatile or the risk is too high. And I think family offices and high net worth investors and retail, in this case, I mean, crypto was actually opened by retail, right? So there's no institutions, family offices were not playing. It was retail investors who suddenly had the opportunity to participate in IPO-like offerings where they could buy Ethereum at $1 and then now it's at $2,000, right? So that kind of return used to be open in the stock market. The big companies are staying private for longer. So that's one of the interesting things about crypto. The early adopters were the retail investors, and they, if they stuck with it, they could make very nice returns. So I hope the retail investors will continue to have an opportunity to participate, and I think this is happening in the US now. The current administration is making it easier. The SEC is more crypto friendly, and I think as a sort of kind of a crowdsourcing thing, it's an important part to give access to smaller investors as well and not exclude them from participating. But of course, that opens risks of fraud and scams, right? And so that's unfortunately part of it.
Well, I guess with any market, as more capital flows into it, chasing the same amount of opportunities.
Sorry? Sorry, what did you just say? We can't hear what you're saying. Do you want to stand up?
It was my phone, Stuart.
Oh, it was your phone. Sorry. I was looking there and I heard different genders' voice. Okay. Sorry, carry on.
No, I was just saying, like, with more institutional capital chasing the same returns, I mean, alpha decay will happen and returns will go down. But I guess one benefit is with institutional adoption, there'll be greater governance because these people need a lot more due diligence, and that will help, raise the bar for all investors.
The market is still extremely small. If we think of the total crypto market cap, it's still very small in relative to traditional assets. With more institutional adoption, as Brendan rightly said, we will see volatility dampening. That being said, there will always be a carve out for high volatility risk on, and I think retail will continue to participate there. And I think actually, you take a step back, it's more so a kind of a change in investor attitude. Historically, the retail investor wasn't able to access any type of sort of high returning return profile of an asset without going to the betting shop. And you look at the gambling industry, it's 10x over the last 10 years. It will be a similar thing. There are parts of the market whereby you can still have potentially a 100x, which is that ICO or IPO type return profile. And so long as that exists, we will continue to see, because it's human behavior, kind of that risk on gambling attitude. That said, I think the institutional world will kind of exist and coexist between the two. Although, that being said, they are definitely merging in some formats because the technology, underpinning that, DeFi as an example, is just a technology layer. It's being merged. We're seeing, Coinbase Wallet utilizing DeFi rails for anyone that's taking a loan within, a Coinbase Wallet. So the two will exist, but it will come closer together.
But does this in some mean that this sort of thing will remain relevant to family offices specifically, Jordan?
Yeah, absolutely. Because from an investment lens, I will say it's obviously going to come down to what the profile is, but the spectrum of opportunity is still broad, and it will remain broad for a long while. So long as that opportunity exists, a family office, typically it's preservation of capital. And within, you look at the asset universe today, preservation of capital means inflation and debasement protection. So you need a return profile that exists in excess of that. Crypto is a good opportunity for that.
Great, Brendan.
I think there will be more institutional adoption. It won't just be limited to family offices. Family offices could get in first because they don't really have any governance requirements, whereas big institutions need a lot more due diligence. And now that you've got more institutional players, banks jumping in, more regulatory clarity, it'll make it easier for big institutions to allocate.
Patrick, and then Bijan.
I think a family office is not a homogeneous group of people. It's basically different pockets of capital with different risk appetites. So some family offices, the third generation, and they only look for capital preservation at a 10% return. And then there are more entrepreneurial family offices that basically look for growing the capital or doubling or tripling. And so they will have very different risk profiles. I think, the institutional adoption is good for the industry to make it more investable. And as I said before, there's always higher risk, higher return opportunities. And so the more entrepreneurial family offices will seek those out. And then the other ones, they can just, they can go with BlackRock.
Bijan.
From an institutional point of view, I recently attended an event, Abu Dhabi Finance Week, and we had most of the US fund managers and large banks present, and they all seemed to be quite positive on cryptos, Bitcoin, altcoins, from a basically structural point of view, payments point of view. So I think the appetite is growing. I'd see them really picking up more.
And yet, in closing, precisely on time, because we are all Swiss, after all, I wonder whether this space isn't, through its evolution, moving to a point whereby, in fairly short order, we're going to find less rather than more family office interest in it as the risk-reward offering changes. That is an open question, which we don't have time to address. Does anyone have any questions in the audience? Very quickly, just throw your hand up. Well, I'm afraid we don't have time for that right now, but if you do have questions, please come up and address the panelists either here or outside. Please join me in thanking these four savants for a brilliant exposition.